Vikram, thanks for being with us today. So Vikram, I want to jump right in and talk really about a couple topics related to DeFi. In particular, let's kick off with the ease of use in DeFi. Over the years, a big complaint we've had is that the user experience was not very easy for customers. Where do you think we are now when it comes to ease of use of DeFi by the broader retail public?
I think a lot of the issues that people have had with using DeFi have also been a function of simply what infrastructure has been available that entire time. And over the last couple months, we've had a lot of big upgrades come to smart contract languages, to Ethereum. We now have stuff like smart accounts. We can now create mobile-first apps with just passkey logins. And I really think that we go through these cycles of apps and infrastructure. And we had some great apps over the last 2 years. We had, and now we have this infrastructure that's finally able to create and power this next generation of applications that I think for the first time we'll finally be able to prioritize things like UX. Previously, what people would actually be focusing on was, if I'm a DeFi app, does my DeFi app make money? And do people have fun using it? And it's mostly catering towards the crypto native crowd. But now we finally have other projects that can prioritize that and make it possible to actually create those things to bring to market.
Vikram, in your opinion, what are the biggest barriers to mass adoption for DeFi? I'm talking here, of course.
Yeah, I think the UX part's definitely a big one. But I think at the end of it, even as nice as something is to use, I think when it comes to new technology, we have to do a better job of educating and highlighting risks, and then also creating an environment based on those risks that people actually feel secure and safe in. I'm excited about some of the mechanisms for new tokens and how they can provide insurance, any sort of credibility, reliability, to what a APY or what any yield is returning. I think that's a step in the right direction. We're going to have more risk ratings. We're going to have traditional companies coming in and analyzing these companies based on not just their smart contract code, but how their off-chain elements are working. And I really think that it's safety, security, and transparency, which, funny enough, are all things the blockchain does great. So we have to show them to users.
So Vikram, from a Superform perspective, I'll be very curious because you technically compete with the centralized exchanges that are offering yield and other offerings to their customers. Do you have any visibility or color on the demographic or the type of customer that is actually using your product, and how if this has changed over the last couple of months or years as a product and the industry DeFi has continued to evolve?
Great question. I think actually right now the two user bases are quite separate, but I would expect them to converge over time. We do have a lot of centralized earn platforms. You have Binance Earn, OKX Earn, but those users primarily are ones that would never actually step off the exchange. I think that you have a set of users that has always been in DeFi for the last few years. And those users typically would not leave their funds on a centralized exchange, or if they were to, it'd simply be for on and off ramping. But yeah, I think the feature set that an actual DeFi protocol can provide compared to that centralized earn platform is going to be a lot greater. I'm going to be able to provide leverage, looping, some other things that the centralized exchange simply couldn't move fast enough, and you at least wouldn't be able to do it on chain. And that's kind of where we're playing, is to create that infrastructure, that earn infrastructure, so that someone could plug into it later, but building it in a decentralized way. Because once you're decentralized, you can build something centralized, but once you're centralized, that's it. And it's really hard to build some of those features on top of that.
Vikram, you were talking earlier about security, transparency, and credibility. To what extent do you think that the industry can strike a balance between innovation and security at the same time?
Very carefully. If you look at some of the issues that we've had over the last few years, it's because something has been marketed as decentralized, and the mechanism is entirely foolproof, up only, and then we have issues with the actual debt spirals and other things that are created economically that make it very hard to manage. It's tough. I think it kind of goes back to maybe there's actually no way to do this with certainty, but what we can do is create better models that will end up creating downside protection, so that we have insurance funds and of sort that are created from the actual yield generated from these products. And then in the case of a scenario where that happens, then at least there's some sort of first lien sort of protection, where at least people that signed up for being safe are still allowed to be safe.
So you believe really the way to provide that downside protection will be via liens and other structures you mentioned, or do you believe one day we'll have a regulatory framework for DeFi? And I know it's very controversial. Many people in the DeFi world would disagree with it. But do you believe that is what is needed to bring DeFi from 1.0 to 2.0 and enable more mass adoption?
Yeah, I definitely think there are good regulations. And there's some going on right now in Congress. There's the Stable Act and the Genius Act. And I think both those are net good for stable coins. In particular, their position on yield-bearing stable coins is that pretty much as long as it's decentralized, we're okay with this thing being a yield-bearing stable coin. And then everything else is going to be a payment stable coin, a bank stable coin. I think it's the right direction, but at the same time, what is decentralized? And kind of going back to what we talked about earlier, you can still have decentralized crypto projects that have even more risks than their centralized counterparts. They're not designed properly. But I think the regulation is going in the right direction for stablecoins, and excited to see that actually translate to other crypto native assets in the same way.
So to what extent do you see that institutional investors are warming up to DeFi? I mean, what are the requirements from this industry in order to have more appetite from them?
Good. I think a good amount of it so far has just been creating the tools for those institutions to come and play on chain. Obviously, now we have those ETFs. We have more and more trading platforms that actually have pro features, all this operational reporting stuff. I remember, back in 2017, the only way that you could really do a lot of this stuff was by onboarding to one or two exchanges. Now we have decentralized DEXs that can actually give you all that reporting stuff, and they've created this really great experience around that. I think that's the first step, is creating that environment. And then the second thing is these incentives, really, for them to move off of their existing rails and for them to actually come on chain and get products that they weren't able to get in TradFi. And a lot of that's going to happen through tokenizing more and more assets, and especially opening up these markets to the world.
That's going to be very, very exciting. Very exciting about what's happening in DeFi and the potential provides. That was Vikram Arun, the CEO of Superform. Vikram, thanks for being with us on Crypto Weekly this week.
Thank you, Vikram.
Thanks for having me.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.